client get from a long short strategy or investing in traditional futures?
It's a great question. So number one, a lot of alternative strategies are highly correlated with the equity market. So for people that are looking for diversification, managed futures are a great option. And it's based on a very simple premise, and it's that objects in motion have a tendency to stay in motion. So if things are trending upward, managed future strategies basically go long those instruments that are trending up. The things that are trending down, they go short the instruments that are trending down. That's the simple concept of a managed future strategy.
But how challenging is that now, given what's happened with the dislocation in several markets, really?
Right. So here's something to think about with managed futures. They're a great defensive tool in a portfolio if you get into a structural bear market. So if we continue to have price declines from where we are, managed futures benefit a portfolio by actually going short those markets that are going down. Now, where they run into more challenges is if you get into a choppy market where you see a lot of reversals, where the market trades down and then it trades back up and then it trades back down. It's a little more of a challenging environment for managed future strategies.
So let's look at the Salient Trend Fund. This was introduced to retail investors in March.
Correct.
All right, it started off very, very strong over the last couple of weeks, and then it seems that that fund too took a bit of a beating with this overall volatility. I mean, it's pretty much in line with what the benchmark is doing. But isn't it supposed to be less correlated to the market?
It is. No, it's a great point. And generally speaking, managed future strategies are less correlated with equities. In fact, they have a negative correlation with equities on average. But there's periods where if equities have been rising a lot in recent measures, then managed future strategies end up going long equity markets. But they're very quick to shed that risk when markets turn down. So if you look at the way that the fund has been managed, you mentioned our fund, SPTIX, that had about a 20% gain heading into this particular month, and then it gave about 15% back, but still up 4.5%, 5%. Which, when you look at the structure that we have on a flat management fee, reasonably high volatility, we're intentionally managing this at a 20% volatility. We think it's a great alternative to some of the more traditional strategies that charge 2% management fees, 20% incentive fees.